Welcome to the StockMiner.com studios here in the Black Hills of South Dakota. I'm your StockMiner, Brian Johnson, making professional trading simple. Getting ready for a new week of trading coming off what was, after looking at it this weekend, a strong Friday. And it is what it is. We had two really good days of trading last week, Monday and Friday, both of them obviously bullish. Tuesday, Wednesday, Thursday were useless, but Friday, you know what? Really, it was a strong day. The breadth was good, volume was decent. It wasn't at all what you would want to see if you were bearish on this market. So, as we proceed forward, I can give you all kinds of scenarios. I can lay this out for you and lay that out for you. But what it really boils down to is now that we've broken some of these overhead areas that I was watching, like 10,500 for instance on the Dow, 1130 on the S&P, obviously more to the point, those two areas. My trading will be a little different. So coming into next week, or this week, I should say, I will treat it a lot like I would an options expiration week. I did mention over the weekend, or I think Friday, I said I was like short-term bearish and longer-term bearish, which I mean ultimately doesn't really make sense. So let me revise that a little bit. Going forward, I am short-term cautiously bullish. Longer-term, I'm still bearish till proven otherwise. So I'm waiting to see what we get in the markets, early in the week. But I do not expect anything but, and I have to, because the charts are telling me to just stay bullish on this market right now. I am cautiously bullish, meaning that if I'm going to trade the indices, now stocks are a little different. Individual stocks depends on the setup, depends on where they're at. But as for the indices themselves and any of the ETFs that apply to them, I will be trading them only from a day trading standpoint only. I will not be holding them overnight. If we get a strong close upwards tomorrow night, Monday night, I may hold into Tuesday or part of a position into Tuesday, but starting Tuesday, I definitely will not be holding overnight from that point forward if we don't get any more sizable pullback before or during this next week. So that's how I'm trading it. That's for you guys to keep watching. There are some overhead targets I'm looking to hit. So for any of you, so for my subscribers that are watching this video right now, please pay attention to the subscribers video I'm going to release next. I'm going to have some overhead areas of resistance I'm going to be watching closely coming into the next week, especially if we break to new highs. All right, so here on the Dow, we have this break up and over the 10,500 mark, and the 10,500 should have acted as pretty strong overhead resistance. As you can see, like a knife through butter. No break. And I'll tell you right here, I can say, oh yeah, but look at the volume and look at the this and I can make up all kinds of stuff. But once again, I'm just going to let the more major publications keep trying to call tops here because obviously maybe I don't think we're quite there yet. Very strong day. We can look at it however we want, but this is something that I've learned very well in my years of trading, and that is it never pays to step in front of a moving train. You usually get hurt. So I'm just gonna stand aside and let it do what it's gonna do. If I have to remain bullish, great. I'll stay bullish for a while. I have no problem with that. Those pants are still clean. I'll wear them for a while longer if I need to. But I am cautiously bullish. So watch for breaks over 10,600 and ultimately 10,700. Let's call it 10,740, 10,750, somewhere up in there. And then I would be watching closely at that point. If we get above that, I can't imagine that we won't have some more bullish action come pouring into the market. Also, keep in mind that we have already had some of the foreign markets have broken the new highs, as well as some of the local indices. Some of the U.S. indices have already broken the new highs, so we could definitely see all of these start to get up and above these areas. So be watching that closely coming into next week. And Mondays have been very good to the markets. No reason you are playing against the odds if you think that tomorrow's going to be a down day, because that hasn't been the case for the last umpteen weeks now. We've had many, many, many more up days on a Monday than we have down days. So I'll be watching that as well. NASDAQ on a 60-minute up here towards the 1890 area. You can see that is one of my overhead resistance areas. 1900 ultimately is my make it or break it point here. We may even see a little gap up again tomorrow morning. Once again, another gap to start the day. and watch for a push or a gap up and above this area. If it manages to gap up to this line, watch what it does this time. I got the just the entry I was, or just the action I was looking for Friday. And I said I was bearish on the markets, and I got stopped out of all those shorts on Friday morning. But I love the open. It opened right to the 11:28 or something like that mark, just below 11:30, and I thought, man, if we can just drop from here, this would be the perfect scenario for the bears. Well, I watched it and watched, and I thought, uh-oh, we're not going down, we're moving sideways, and that was just like a big red flag. That was a big, uh-oh, here we go. Sure enough, broke to the upside. We all know what happened. So watch the NDX do the same thing maybe tomorrow. Watch where it gaps up. If it gaps up to this line and hangs out there for a while, that's usually ominous for the bears. You want to see it, start the day and just start to move down from there if you're bearish. NDX on a weekly coming right back up to our highs. Any break above it takes us back to that 1960, 1970 area. I'm watching that closely coming into next week too. Here we have the SPX on a 60-minute also breaking up and over right through that 1130, slicing through it like it wasn't there. 1140 is an area of overhead resistance, but 1130 should have been a stronger area, so I can't imagine 1140 is going to actually hold, especially with any kind of a gap up tomorrow. Even a 2-point start to the day puts us up and above 1140. So watch again this 1150 area up here. Now I will say this for some of those major publications, especially the major Elliott Wave publications, who were, I think they were on CNBC not too long ago, touting how they called the top at 1150 after 3 failed attempts. But anyway, up above 1150 here is where the count, I think, would change a little bit for them. However, if it does not break 1150, then it's fine. That count is still in progress. So we could see a slowdown up here and a turn around 1147, 1149. Doesn't matter. As long as it stays below that 1150 mark, everything's fine. Count is still good. Keep that in mind as we press forward for those of you that are Elliotticians or amateur Elliotticians. SPX on a weekly, here we go again, coming up towards that high, watching very closely as the NASDAQ approaches and does the same thing. VIX on a daily, look at it just fall apart. There's even a nice big gap in there from last week and straight down, which is really kind of odd. It's odd to see the VIX gap down, especially at these lower levels, to gap down, and then not come back up right away or see some sort of bullish movement to the VIX at all once it gaps down, but it hasn't, and we just keep dropping to these new lows. Here I drew in some new lines this week. I cleaned up a lot of the charts and put new lines, fresh new lines on them. So here you can see what I'm looking at. Here's a blue line I'm watching. It'll coincide now once this new candle starts on the weekly with this green line down here as well. But any break below that, look, we've still got the dotted line. The next really major level of support for the VIX is way down here. I mean, just the last few weeks we've seen fear just pour out of the markets. So Apple on a 60-minute, you can see it having a